U.S. stock markets were closed on Thursday for Thanksgiving, while Friday reopened with a shortened trading session. By the end of the day, all three major indices extended their recovery momentum.
The Dow Jones and NASDAQ climbed around 0.6%, while the S&P 500 gained roughly 0.5%.
The NASDAQ, heavily weighted toward technology and AI firms, has shown a tight correlation with Bitcoin recently.
Despite its recent bounce, the NASDAQ still finished November in the red. Bitcoin is trading around $91,000, mostly unchanged compared to several days earlier.
2 days ago, Bitcoin touched $93,100 before slipping slightly. For the past 4 days, Bitcoin has moved sideways near the $91,000 range. This November has not followed Bitcoin's typical pattern of strong seasonal performance. Last November, Bitcoin rose 37.29%, following an October increase of 10.76%.
In 2023, Bitcoin gained 8.8% in November after climbing 28.5% in October.
This year, October saw a 3.6% correction, while November is currently down 17.14%. Historically, November is one of Bitcoin's strongest months, but this year it has turned sharply negative. Ethereum has performed even worse, with 3 consecutive red months, including a 21.88% drop so far in November. It has been a difficult month for many assets, including Bitcoin, Ethereum, and the broader altcoin market.
In broader markets, oil is trading near $58.48 per barrel.
Gold futures recovered 1.29%, closing at $4,256 per ounce.
Silver rallied 6.49%, reaching $57, compared to around $31 a year ago. Anyone who believed in silver has enjoyed very strong returns during the past 12 months.
Today, most crypto assets are in the red, with only a few turning green.
Total crypto market cap stands near $3.1 trillion, little changed from yesterday.
Bitcoin is flat, Ethereum is down 1.3%, XRP is up 1.1%, and BNB is down 1.1%.
Overall, the market has remained relatively quiet for at least 2 days.
Tom Lee appears to be one of the investors currently facing the most pressure.
MicroStrategy kept accumulating Bitcoin, though at a slower pace during tougher fundraising conditions.
For Saylor, who views Bitcoin through a 20-year lens, buying now or at higher prices makes little difference.
However, Tom Lee is under even greater pressure, especially given his major commitments to Ethereum recently.
His company appears at the top of Ethereum treasury holdings with 3,629,701 ETH, worth about $11 billion.
Their cost basis is higher, meaning they are underwater, unlike MicroStrategy, which remains in profit.
The pressure on Tom Lee and his firm at the moment is extremely high.
Tom Lee is frequently interviewed on major news channels where he explains his market views.
In his latest appearance, he said, "The sharp crypto drop has created extremely negative sentiment."
Many investors worry this decline marks the start of a year-long downtrend in the 4-year cycle.
He argued price action is not always reliable because fundamentals can improve even when prices lag.
According to him, the market is stuck in a phase of disbelief despite strong underlying improvements.
He said Bitcoin is becoming an institutional asset, attracting a new class of buyers.
The U.S. Clarity Act defining crypto securities is delayed due to the government shutdown until early 2026. He noted the US government is still discussing a potential Bitcoin reserve strategy.
They are not selling seized Bitcoin, which he views as a positive sign for overall supply dynamics.
For Ethereum, he sees stablecoins and tokenization as the biggest catalysts ahead.
Companies like BlackRock and Robinhood are helping bring traditional assets onto blockchain rails.
He emphasized that these innovations continue regardless of short-term Ethereum or Bitcoin price action.
Tom Lee insists the market has not yet topped in this current cycle.
He believes Bitcoin and Ethereum could still reach new all-time highs next year as liquidity improves.
There is a contradiction in his view about timing within the 4-year cycle and near-term predictions. He gives strong long-term reasoning, but many investors react emotionally with short-term decisions. Retail investors cannot absorb the same level of drawdown as wealthy long-term players like Tom Lee. Short-term predictions are difficult due to external factors like stock instability and liquidity shocks.
Tom Lee believes this drop is near a bottom, especially for Ethereum, expecting support within days.
He predicts a V-shaped recovery with a sharp drop followed by a rapid rebound as liquidity improves.
This scenario could push Ethereum towards $7,000 to $9,000 during the next major rally. He expects Bitcoin to rise back above its all-time high by late January 26.
MicroStrategy recently released credit metric updates to reassure investors about its financial stability. The company said it can operate for 70 years, even if Bitcoin remains flat. If Bitcoin drops to 74,000, assets still exceed debt by 5.9 times.
Even at $25,000, Bitcoin assets still exceed debt by 2 times for MicroStrategy.
CryptoQuant's CEO believes MicroStrategy is extremely unlikely to sell Bitcoin even in a deep bear market.
He clarified the misconception that MicroStrategy would be liquidated if Bitcoin fell below their average purchase price.
Their holdings are mostly spot Bitcoin, and their debt consists of company-issued bonds, not leveraged BTC loans.
Now we move to the sponsor segment, featuring GuruFin and its expanding ecosystem.
GuruFin explains it is not creating a currency replacement, but building infrastructure layers like KRGX and USGX.
GuruFin Chain serves as a neutral settlement layer that connects different national systems.
Inside the GuruFin wallet, users set up PN or Face ID and verify email and phone for security.
The wallet is non-custodial, meaning users fully control their own assets at all times.
During testnet, daily check-ins are recorded on-chain to help stress test network performance. GuruFin is running multiple events, including a public testnet and a wallet sharing challenge.
The Share Your Wallet Challenge offers around 250 USDC in weekly rewards.
Daily check-in events are also active, with a total prize pool of roughly 3,000 USDC. Users can also claim a free Genesis Contributor Core NFT during participation.
The platform includes a mini-game system tied into broader community engagement. GuruFin has allocated 20 million GXM tokens for early contributors and testers.
Moving on to Ethereum news, we see new developments involving the government of Bhutan.
Bhutan recently staked 320 ETH, worth about $970,000 through BitGo.
This makes Bhutan one of the rare countries running validators directly on Ethereum. BitGo specializes in institutional custody and staking services trusted by major entities.
Bhutan has been involved in crypto for years and secretly mined Bitcoin using hydroelectric power since 2019.
The country now holds about 6,154 Bitcoin, valued at more than $562 million. Instead of selling excess electricity, Bhutan converts its unused hydropower into Bitcoin production.
A well-known analyst, the CEO of CryptoQuant, has returned to a bearish stance based on weakening indicators.
I believe on-chain data is now less reliable because OTC and institutional flows distort interpretations.
Since my approach is long-term, and I do not rely heavily on on-chain metrics for decision-making.
A bit of hopium comes from the Coinbase Bitcoin Premium Index, turning slightly positive.
This means US buyers are paying slightly more for Bitcoin than users on international exchanges. The premium is still small, so it is too early to draw any meaningful conclusions.
Next week, key events include employment data from ADP and the PCE inflation report.
On December 1st, Fed Chair Jerome Powell will speak, while the Fed officially halts quantitative tightening. Ending QT stops liquidity from being drained and marks the first step before potential easing.
Other events include testimony from Fed Vice Chair Michelle Bowman and incoming jobless claims data. On Friday, the U.S. will release PCE and core PCE numbers, which reflect September data due to delays.
This is the final major data point before the Fed's meeting on December 10th.
Markets currently estimate an 86.4% chance of a 0.25% rate cut and a 13.6% chance of no change.
On the regulatory side, CFTC Chairwoman Caroline Pham invited CEOs to apply for the CEO Innovation Council. The council will focus on new market structures, including prediction markets, perpetual futures, and tokenization.
She emphasized the U.S. is entering a golden age of innovation and needs industry leaders to guide policy.
The CFTC clearly supports development in this sector, signaling continued progress for digital assets.
In global payments, Visa is partnering with Aquanow to integrate stablecoins like USDC for settlement.
This integration targets Eastern Europe and the Middle East and Africa, enabling cheaper and faster transfers.
Stablecoins continue gaining traction within traditional finance systems around the world.
Germany's Deutsche Börse is preparing to integrate euro stablecoins into its custody and payment systems.
The trend is clear: stablecoins are becoming modern payment solutions, and major institutions do not want to fall behind.
Meanwhile, China has reiterated its crypto ban, emphasizing that all crypto activities remain illegal.
Crypto is not legal tender in China and cannot be used for payment purposes.
Authorities warned stablecoins over lacking proper anti-money laundering and identity controls.
China continues prioritizing the rollout of its digital yuan, also known as e-CNY.
Despite restrictions, underground crypto activity persists, and China still contributes around 14% of global Bitcoin hash rate.
In reality, China is simply reiterating existing policies rather than introducing new prohibitions.
Chinese courts have consistently ruled that Bitcoin is legal property protected under law, even if trading is restricted. Notable precedents include rulings from the Hangzhou Internet Court in 2019 and Shanghai High People's Court in 2022.
Turkmenistan will legalize crypto in 2026 under strict regulatory control and licensing requirements.
Banks will be prohibited from offering crypto services, while miners must register with government authorities.
Crypto will be permitted in Turkmenistan, but will not be recognized as legal tender.
In the UK, regulators propose delaying capital gains taxes until users dispose of their tokens.
Activities like lending, borrowing, and liquidity provision will follow a no-gain, no-loss principle.
Bitcoin ETF flows recorded 3 consecutive days of net inflows yesterday.
In this season. On Friday, BlackRock had a minor outflow, while other Bitcoin ETFs remained in positive territory. Ethereum ETFs posted net inflows for the entire week, though the amounts were relatively small. Solana ETFs saw their first outflow on Thursday, but flows returned to positive on Friday. These ETF trends reflect shifting investor sentiment across major crypto assets as the week concludes.
Overall, the crypto market closes the week with mixed signals between macro pressures and institutional accumulation.
As the macro landscape evolves, investors continue monitoring liquidity trends and regulatory signals worldwide.
Employment data remains a critical driver for risk assets, affecting expectations for rate cuts and economic momentum. Inflation indicators like PCE and core PCE will guide the Fed's stance on future monetary easing.
Liquidity shocks remain one of the biggest risks for crypto markets, influencing both volatility and direction.
Analysts remain divided between bullish long-term potential and short-term caution across major assets.
Bitcoin continues gaining institutional traction, which supports its long-term growth outlook, despite short-term uncertainty.
Ethereum's role in tokenization and stablecoin infrastructure remains a major driver for future expansion.
Altcoins move largely in correlation with Bitcoin liquidity cycles, making them sensitive to macro shifts.
Investors must balance risk management with long-term conviction, especially in volatile crypto markets.
Market sentiment may slowly recover as economic data stabilizes and policy direction becomes clearer. Cross-market correlations remain strong, with equities, crypto, and commodities reacting similarly to macro liquidity. Commodities like oil, gold, and silver continue reflecting global demand shifts and safe haven positioning. More countries are exploring blockchain frameworks as part of long-term national digital strategies.
Institutional custody services continue expanding, creating new on-ramps for large capital inflows.
Nation-state mining models like Bhutan's highlight how surplus energy can be transformed into digital assets. U.S. buyer premiums may indicate rising domestic demand, though signals remain early and inconclusive. ETF flows show how institutional appetite fluctuates with market sentiment and broader economic expectations.
Corporate Bitcoin strategies continue maturing as firms adapt to new financial environments.
Greater regulatory clarity, like the upcoming Clarity Act, could reshape the crypto market significantly by 2026.
The 4-year cycle remains a widely watched pattern, though timing deviations can occur due to macro factors.
Long-term adoption for Bitcoin and Ethereum continues climbing, with increasing institutional and global participation. Improving liquidity conditions could support stronger market performance heading into next year. Volatility remains compressed in several assets, suggesting a potential breakout once new catalysts emerge. Major assets like Bitcoin, Ethereum, and Solana continue attracting attention from both retail and institutional investors.
Long-term resilience often proves more valuable than short-term reactions, especially during periods of uncertainty. Maintaining discipline helps investors avoid emotional decisions that lead to unnecessary losses.
Macro indicators including rates, inflation, and liquidity remain key drivers for crypto direction heading forward.
As markets weigh risk and opportunity, investors remain cautiously optimistic, entering the next phase.
With shifting conditions and evolving narratives, the coming months will shape the next chapter for global markets.
Thank you for following this comprehensive market update.
as we continue monitoring key developments worldwide.